What's up guys, it's Levi from Wall Street Survivor and we are back at it again to continue in our 10-part Survivor 101 series, educating you guys on how to start investing in the simplest and easiest way possible. Today is the day where we continue to build and expand on your portfolio that you should have started off with an awesome S&P 500 ETF. If you don't know what I'm talking about, go check out the last video in the Survivor 101 series and make sure you catch up on all the previous videos so that you know what I'm talking about moving forward. Like I said, ETFs are the perfect first stock for everyone to buy, but as you build your skills and trading knowledge, you should look to expand your portfolio beyond just your S&P 500 ETF. So the goal is by the end of this video that you guys have some awesome strategies for continuing to build your portfolio so that you can become better and better investors and hopefully grow your returns for whatever financial goals you have for investing. Now make sure you watch till the end of this video because I'll be sharing some of my favorite investing resources and tips with you guys. Make sure to subscribe to the Wall Street Survivor channel. Throw us a comment down below about what you would consider buying for your next stock in your portfolio. And make sure you throw a thumbs up as well if you like this video and are looking for more content like this. Okay, I know what you're thinking. Why do I need a strategy? We hear about big companies every day, they seem to be growing exponentially. Why not just buy stocks in those companies? And unfortunately, there's a lot more to the stock market than just knowing which companies are on the Fortune 500 list. Let me start us off with a quick story about my friend, we'll call him Craig. Craig is my friend and he invests in the stock market and he should really have been watching this series before he started investing. There was a popular stock a few months ago called Luckin Coffee, and Craig decided that because it was making headlines and was making the news that he was going to just go ahead and buy stock in Luckin Coffee without much strategy or research behind his inkling. He decided to buy Luckin Coffee at $40 a share, and a month later it had plummeted to $4 a share. Now Craig suffered huge losses from this investment because it didn't align with any proper strategy and he didn't do his appropriate due diligence before buying the stock. Companies like this exist all over the place. For instance, one of the hottest stocks of the past couple years has been Tesla. And Tesla over time has proven to be a super volatile stock. A lot of people have made a lot of money off of it, but a lot of people have also lost a lot of money on it. And in order to avoid this, we can implement some simple strategies that will help you know how to build your portfolio and pick stocks with much less risk of losing your hard-earned money. Sometimes people buy stocks when the stock is hot, and you can stand to lose a lot of money buying hot stocks when they're nearing their peaks, so you want to have a strategy behind why you're buying stocks in order to know how to pick them and what the right time to buy is. So before we get into the actual investing strategies, let's talk about some essential steps you need to take in implementing a strategy. Step 1. Examine your current financial situation. Decide how much you can invest up front and how much you might be wanting to invest on a recurring basis. As you start to invest, it's important to know that how much you're investing is realistic, and especially if you're long-term investing, you want to invest money that you won't need to pull out anytime in the foreseeable future. Now, we've already covered how you don't need a ton of money to invest, but it is essential to only invest what you can afford. Maybe start with an upfront investment of $500 or $200, and then try to figure out how much you can contribute on a recurring basis, maybe $50 a week, $100 a month, whatever it may be. We've talked about this method in a previous video. It's called dollar cost averaging, and it's one of the safest ways to mitigate risk when you're investing in the stock market by investing on a recurring basis. Okay, so what's step 2? Set a goal for your investments. What do you want to use this portfolio that you're building for? Is it for retirement or a vacation? Setting a time frame helps you understand your risk tolerance when you're investing. Do you have time to bear a downturn in the market, or do you need to invest your money in less risky stocks? Finally, step 3, pick a strategy. One that's suitable and effective for you, what your goals are, and how much time you have. Today I'm going to share 3 different strategies for how to pick stocks. Strategy number 1, the Warren Buffett approach. And his strategy, since the beginning, has been to invest in the value of a company. Too many times, people don't quite understand that they are actual business owners when investing in stocks. According to Warren Buffett, this is essential when investing and picking stocks. Your goal here is to find companies that have a stock price that underestimates their current or future value. So if you buy the stocks and the stock price eventually catches up to what the company's actual value is, then you start making money. This is called value investing, and it's proven successful for a lot of long-term investors. Who knows? You could be the next Warren Buffett. Strategy number 2 is known as growth investing. Alright, I'll illustrate an example for you. So say that our friend Sue is creating a automatic lawn mowing business. You know, like a Roomba for lawn care. And then our friend John, he's a traditional landscaper. Currently, Sue only has 5 clients, and she's testing her new outdoor product, the automatic lawn care Roomba. On the other hand, John, the traditional landscaper, he already has 20 clients. For simplification, let's just say that this means John is bringing in 4 times the current revenue that Sue is. In the short term, John's company appears to be better than Sue's. It's making more money, it has more intrinsic value, more assets, more clients. But if Sue's idea works and she can automate lawn care, then she has a massive competitive advantage over John because she won't need to hire anybody to run the landscaping crews. She'll just basically have robots doing it for her. This means her company, if it works, will prove in the long run a lot more profitable than John, who has a much higher overhead than Sue does. So in a few years, when Sue masters her outdoor Roomba technology, her business is going to be worth way more than John's. Although this is a way oversimplified example, it illustrates the growth investing strategy. Select companies with the most potential. Companies that are going to disrupt the industry, create innovations, and prove a lot more profitable in the long run. That's a lot of information to keep up with yourself, way too much for just one person. But thankfully there are resources out there that will do that research for you. They have entire teams of analysts that can alert you about all the information you need to know about the current stock investing landscape. Some even suggest stock picks for you. The Motley Fool has been one of the most successful stock picking services since its inception. The average of all of their stock picks combined has been over 400%. The Motley Fool has picked massive stocks like Shopify, Tesla, Netflix, Disney, all before these stocks have taken off and investors have seen massive returns in the hundreds and thousands of percents from a ton of their stock picks. If you want to know more about the Motley Fool and their stock advisor investing service, check out the link in the description below. I'd highly suggest you guys take a look. So now that I've broken down these 3 stock picking strategies, it's time to pick what works best for you. And no one's saying you can't mix all 3, but it's important to continually learn and understand about these strategies and pick stocks according to what works best for you, your goals, your capital, and your time horizon. So let me know in the comments which strategy you're most attracted to and what you think will work for you. Whether you're going to use value investing, growth investing, or whether you might enlist the help of a stock picking service like the Motley Fool. Each of them is a great strategy, but investors each tend to have their own preference, and that's the magic of the stock market. So let us know what you decide on. I'm excited to see where your guys' portfolios go from here. Thanks so much for watching this video. This concludes part 6 of the Survivor 101 series, bringing you one step closer to becoming an expert investor in the simplest and easiest way possible. Till next time, survivors, thanks so much. See you guys soon.